Okay, welcome everybody. We're excited to host a wonderful webinar today with you with Madison Trust Company. Got some wonderful things happening here at Summa Terra Ventures, and we would like to partner with Madison Trust Company both in some of our projects with some of the assets they have for investment opportunities, and then also potentially have you partner with us in some real estate investment transactions in some ground up construction and multifamily. So we're wonderfully excited to have these guys here, Madison Trust Company, today, and to co-host this webinar to share with you just how versatile and fantastic self-directed IRAs are and how they can be a vehicle for you to create wealth and retirement opportunities for yourself through many vehicles, but more specifically and more importantly through Summa Terra Ventures and the assets that we have available. We do have a number of people here in our group. Summa Terra Ventures is a ground-up construction multifamily firm. We're in 5 states across the country, and we have projects going in those states, and you are able to come in and be a partner in one of our projects. We'll talk about that here briefly. And many of our capital partners have chosen to use a self-directed IRA for some obvious reasons and some reasons that might not be quite so obvious. So today we're going to start off with a little presentation on who Summa Terra Ventures is, what we do and why we do it and how we do it, and why it would be appealing for you to do it. Then we'll turn the time over to Madison Trust. They can talk about using your IRA to turn it into a self-directed IRA or creating a self-directed IRA. And then we'll have some question and answers at the end of the presentation for us to make sure that we're all on the same page and we can move forward. So one of the things I want to do is just give a quick introduction. Is there anything you guys would like to add, Madison Trust, to that brief introduction as we get started here today?
Well, let's introduce ourselves. My name is Nicole and this is Michael. So we have 2 mics here, a part of our presentation today.
Yeah, and we also have Ian joining us. Ian is one of our account executives over here, so he helps with the onboarding process for individuals looking to open a self-directed IRA. And I just really like how you describe self-directed IRAs as well. It's a great word to use, a vehicle or the powerful tool. That's what we really like to focus on for the retirement side of things. But yeah, why don't you jump right in for the Summa Terra side of things?
Very good. Yes, we're excited. I'm going to do such a great little presentation here that Madison Trust is going to set up some of their own self-directed IRAs and become partners with us. I'm just certain of it. So that's how we'll know if we've succeeded in what we've shared. So wanted to share with you real quickly that we're excited to have you here, and we'll get started here on our presentation. And I'll go for about 10 or 12, 15 minutes, and then we'll turn the time over to Madison Trust for a presentation. Then we'll have some brief question and answers at the end there for us to get everybody on the same page. So let me start there with our presentation. I'm going to screen share this to Summa Terra Ventures. This is Latin, by the way. If you're not bilingual, it's okay. It's Summit Land. It's the ultimate land that we're searching for here. Summit Land. We are a land company, even though we do multifamily development and construction. The first piece of that is the land. We look for the best land that is zoned properly. And the zoning we typically look for is multifamily. The apartments is a hot commodity. I personally believe it's the best sector of real estate investing out there, as there will always be people that need a place to live. Additionally, we focus on workforce housing, which is the entry-level housing. So we have lots and lots of people that qualify to live in one of our projects, and they are fantastic ones at that. I want to start with a presentation on who we are. We can't talk about Summa Terra Ventures without talking about our inimitable owner. Aubrey Palmer is our owner, founder, and our current COO of Summa Terra Ventures. She also happens to be my wife. So that is an added benefit that I have here, that I work for my wife every day. She has hired me as the CEO. My name is Mike Watson, and I am the CEO of Summa Terra Ventures. But the power that is wielded here in Summa Terra Ventures starts and ends with Aubrey Palmer here. Unbelievable wife and wonderful human being. She's our owner. She founded the company back in 2018. She's our current COO. Between Aubrey and I, we have close to 40 years of real estate experience between the 2 of us, and then you add our team into that, and we're well-heeled in what we do. So Aubrey helps out with a number of the important items around the office. We kind of call her the soul of the office here. She runs the office, she runs the people, and I like to say I run the projects. So we have a good combination there, but she is absolutely wonderful to work with. Now, one of the things that we do here at Summa Terra Ventures is we take a look at markets. I mentioned to you that we're in 5 states. People often ask, what state are you in and why? We look for markets that have zones and regulations and laws where the zoning is law. Now, some of you may not know this, but every piece of property in a city, for example, has a zoning designation. And every piece of property that has a zone, each zone, you're allowed to do certain things specifically. So we like to look for cities across the country that need and hope for multifamily projects that are already zoned and designated as multifamily project areas. And then we love to have states that legislate that if a property is zoned a certain way, we have to be able to be allowed to use that. So we call that zoning is law, and we call that use by right. So if we find a piece of land that is zoned multifamily, it is the law that we can build a multifamily project there. And unfortunately, that's not true in all the states. So we have that going for us. We meticulously look through the country and search for every market we pursue, relying on extensive and thorough research. We have over 20 criteria we look for in each city for what is the best area that we have, and we ensure that every market we engage in meets with our strict criteria. So once we designate an area, we then look for land throughout these markets, and land, again, that is already zoned multifamily. What that means is we don't have to take a long and expensive attempt through the city to try to get it zoned for the particular use that we have. It is already zoned multifamily. So it's now a question of not can we do a multifamily project there, is does a multifamily project work there? A lot of companies that do what we do will take on projects and they'll spend a year and oftentimes 6 figures in money trying to get a piece of land zone changed, and they fail. And if you're in one of those deals, it's a somber reminder that the best way to do it is just to find land that is already zoned for what we do. And if it meets our criteria and it's zoned for what we want to do it, then we place that property under contract. During our contract time, we run through a process called entitlement. Now, if someone were to say to you, hey, this piece of property is zoned multifamily and it allows for 20 units to the acre and it's 10 acres, 20 units to the acre at 10 acres means I get 200 units. Guess what? That's zoned for 200 units. It is not entitled. Entitled is the process of putting a project under contract, and then we get an entire set of civil documents through the city processes that includes engineering and landscaping, architectural city approvals, reports and tests, and we take that through the full city process so that not only is that project zoned multifamily, but now it is an approved multifamily project. Now, we generally stop short of full construction drawings, but the full site plans and civils. So most of you may not know that in construction, there's 2 sets of construction documents. If I were to show you a big set of blueprints, you'd say to yourself, oh yeah, that blueprint is what you use to build a building. Well, most of people don't know that there's a separate, smaller set of blueprints on how to construct the site. So there's 2 sets of blueprints. In the entitlement process, we do the site approval, and we generally do some general architectural drawings like the picture you see here with some basic floor plans. We get all of those things done, all of those things approved through that city process, and only then, when we're finished with that process, we're at the finishing stage of that process, do we actually close on the land. And we purchase the land knowing we have it zoned for its use and the project is approved or at the finish line of approval for us to move forward. Now, it's important that I tell you that, and I want to share that with you because a lot of firms out there, if they want to get into ground up construction multifamily, you'll put capital in one of their deals and you'll sit back the first year and hope that it gets zone changed. Then the next year, you'll hope that it gets entitled. And you'll hope that it gets the number of units that you're trying to get. And all of those things can have great impact on the financial return that you have. And your IRAs, your self-directed IRAs, are precious to us. Those funds, we know how hardworking you are and how difficult it is to put funds together for retirement. And we want to grow those. So we're very, very meticulous. And before we ever bring a capital dollar into a project, it's zoned, and it's fully approved as a project. So fantastic in that regard. Once we have the entitlement done, we get the financing. We fund all of our projects through capital partners rather than typical investors. If you bring money into one of our projects, you are not an investor. We like to say we don't do investments and we don't have investors. You are a capital partner, which means you have a voice. You're going to participate. And truth be told, most of the people that come into one of our transactions is seriously interested in learning ground up construction and multifamily. Whether you want to start with smaller projects or be in bigger ones like this, we have capital partners. So if you say, hey, Mike, I'd like to invest in one of your properties, I would say, oh, you want to make a capital contribution in one of our properties. There's a big difference there. Investors hand off money and they come back in a year with their fingers crossed. Partners get in and roll up their sleeves and we get to work. And you get to be a part of it. You get to vote. You have a voice. We have our monthly Zoom meetings. In fact, tonight we have our first 7 Zoom meetings for our monthly Zoom calls for our first 7 projects that we have capital partners in. So one difference for us is we finance these through capital partners. The cash and equity required by the bank for a construction loan is brought forward by our capital partners. Now, many of our capital partners do use self-directed IRAs. And it was interesting to have Madison Trust reach out to us because we got on their radar because a number of their people were putting IRAs and their self-directed IRAs into our assets. And they said, hey, we want to meet these guys. So this is what gave birth to this webinar today. So we look for participation with these capital partners throughout the lifetime of a project, and for these partners to act like owners of the project because they are. So you're not you're not an investor, you're an owner, and we treat you like an owner. And it's an unbelievable learning experience. And the vast majority of our partners come back again and again and again. And we have partners that are in as many as 6 and 7 deals, 5 deals, 3 deals. They don't just do one because they love what we're doing. Now, once the project is approved and drawn, we do the construction management piece. We obtain a building permit. So we do the full construction drawings. That's that second set. That's the full big set of construction drawings. That's the blueprints for the building, not just the site. We obtain that. We assume the role of construction management for the project. We represent our partners in the asset, and every asset we do, by the way, is set up with a brand new single member LLC. So there are no commingling of assets in our LLCs. There's no commingling of funds. These are all standalone, segregated, compartmentalized assets, which is the fantastic best way to do that financially. So we assume the role here at Summa Terra Ventures to do the construction management for the project. We collaborate closely with the general contractor to ensure the creation of an exceptional final product. And we build these assets and they are wonderful and they are cash machines when done correctly. Now, once they're constructed and built, we do one of 2 things. Our partners make this decision. We either refinance them, and a lot of us choose to stay in. You don't have to be, we don't sell each one of these assets. For example, the asset on the left here is 107 units. We just finished in Clearfield, Utah. That was sold to a company in October of last year. We have regretted every day since that we sold this asset. We've regretted selling it. These are unbelievable assets to keep in your long-term portfolio. And on the right-hand side here, we have a 40-unit asset in Denton, Texas, that we do own and we have kept. And we're trying to keep 6 or 7 or 8 of every 10 projects that we do for our long-term wealth. One of the things we say here at Summa Terra Ventures is you can either make some money, some fantastic returns being a partner with us, or you can create some long-term wealth by owning these assets. So there's multiple assets opportunities there. Now, most of the people that come into Summa Terra Ventures as a capital partner say up front, gosh, I want to try it out. I want to see the system. I want to see it work. I want to see these great returns you're talking about. And that's fantastic. When we put you in an asset like the one on the left here, the Heart at City Center, and we decide to sell it, then you get paid back. Your money goes back into your self-directed IRA. We have the arm's length transaction that you need. It's handled correctly on the paperwork side so that you're in great position to grow that self-directed IRA's value. On the right-hand side, if we keep an asset and you don't happen to want to stay in, when we refinance, we can pay you out. When we refinance from our construction loan to our long-term loan, we can buy out partners at that point and you can move on to your next Summa Terra project with your IRA. So in either case, whether we're deeming a project as one we're going to keep or one that we're going to sell, there's an easy way out for you at the end when we either sell or refinance from construction loan to long-term finance. And that is our post-construction. Now, your involvement, you guys can be involved in a number of different ways. Obviously, self-directed IRAs are an unbelievable way to do that. And to be clear, your self-directed IRA would be the partner in the project, and we would consider it a partner, and you'd be designated as the voice for your IRA. But there's some very specific ways and rules that we need to handle your IRA so that it is not a problem later for that legal requirement for how it's handled. You can also be involved in one of our projects with cash if you have some cash. I can't tell you, I would say most of, and I'm trying to think here quickly, most of the people that have done a self-directed IRA with us also have additional cash that's not in their IRA in that same project or an additional project. So you can be a cash participant in addition to the IRA. And we also accommodate 1031 tax deferred exchanges. So for example, if you were able to sell a duplex or a fourplex or a house and you had some equity, you could do a 1031 into one of our projects. Even if it was a $30 million project, you could do a 1031 in. There's a way for us to accommodate you and turn you into a capital contribution partner with that 1031 tax deferred exchange. And then of course, the last way for you to participate is through your involvement as a loan guarantor. Now, loan guarantors are generally the people that come in and sign on behalf of the LLC for the bank financing. And there's some fantastic rewards for doing that. So these are the ways that we participate in our assets. So just as a synopsis here, before I turn the time back over to Madison Trust, we are a ground up construction multifamily firm in 5 states. We are very aggressive with what we do. We try to take out as much risk as possible as we can by getting these projects fully approved, zoned through the civil documents and through the city before you ever enter the fray. We're very communicative and have lots and lots of experience in sharing with you. The best part about what we do here, and I want to share this with you, the best for last, is we target 40 to 70% returns on your capital. So if you had an IRA with $200,000 in it, it's a sliding scale, 40%. Our minimum entry is typically $100,000, but if you had an IRA with $80,000 in it, we would not turn that away. We target that. We target a 40% return for the life of the project. That's not annualized. So if a project takes 18 months, that'd be 18 months at 40%. If you're at 200,000, you might be 50%. If you're 500,000, you might be 60%. So if you're at 500,000 at a 60% return, your targeted return would be $300,000 that would go back to your IRA on top of the $500,000 as it comes back. And because there is high risk in real estate and high risk in development and construction, we have very great rewards. And it is one of our stated goals here at Summa Terra Ventures to take out as much risk as possible through the underwriting that we do, through getting a project approved before you ever step foot in it. We try to get the best contractors in the country to work with us, and we watch these projects very, very closely as we do that. So we have targeted returns. You heard that correctly, of 40 to 70%. Now, one of the things I hear constantly is, Mike, that's too good to be true. And my response is always, well, let's lower it down to a place where you're a little more comfortable. Let's lower your return down so you're a little more comfortable, and we'll get you started there. And people realize, okay, show me how that's doable is the better question, right? Not as too good to be true. So again, my name is Mike Watson. I'm the CEO of Summa Terra Ventures. I'd like to turn the time over to Madison Trust with this brief introduction I've done on kind of our business practices, how we're successful, what states we're in, the process that we do. We'll have them make their presentation on the Madison Trust side, and then we'll open up for questions at the end. So let's turn the time over to you guys, Nicole and Michael and Ian.
Awesome, thanks so much. I'm putting a slideshow up here. Can you guys see our screen here that we're sharing?
Yes, we can see that.
Perfect. Okay. Awesome. So just to reintroduce ourselves, once again, I'm Mike number 2 on this webinar, and I'm joined by Nicole. We make up the sponsors team at Madison Trust Company, and we have Ian with us, one of our account executives over at Madison Trust, who helps with onboarding new clients. So one of the things that our sponsors team likes to do is we work with our sponsors in a number of ways. And one of those ways is through educational outreach. We really like to bring knowledge about this powerful tool that investors can use. And that tool is the reason why Madison Trust exists today. It's a self-directed IRA. So what is a self-directed IRA, and what is the difference between a self-directed IRA versus a regular IRA? The answer to that is really nothing, but also everything. What I mean by that is a self-directed IRA is an IRA. It's a retirement account that you put money into and you invest it. But the difference is what you invest into. Most IRAs are going to be tied to the stock market. A self-directed IRA exclusively deals with alternative assets. Those alternative assets are things that fall outside of those traditional classes. So, stock, bonds, cash, that's all regular IRA stuff for regular investment stuff. The alternative assets is everything else. So you see an example of a few things up there. Real estate's a big one. Private placements or private funds. People invest into llama farms or cattle. You can really do quite
Creative our clients are.
Really whatever you'd like to do. Debt instruments or precious metals. There's really a lot that you can do with it. And that's the true beauty of the self-directed IRA, is that you tell us how to invest your funds. So how do you go about setting up a self-directed IRA? Nicole, please tell us how you would set up with Madison Trust.
Sure. Thank you so much for that introduction, Michael. So I'd like to start by saying that we do have dedicated teams here at Madison Trust Company that really like to strive to make the process as seamless as possible for both our clients as well as our investment sponsors. So as you can see on the PowerPoint presentation here, we focus on three things: opening the client's account, funding, and placing the investment. So let's get right into it. How would you open your account at Madison Trust Company? Well, there's two ways. You can either do it through our online account application, which can be done in 10 minutes or less. We've tested this. Or you can work with our account executive, Ian, who's on the screen. Ian, give everybody a wave here. And Ian's really going to be able to answer any questions that you may have about the onboarding process, steps of the account application if needed, as well as the expectations of our services that we provide. Next, it's time to fund your account. There are a few ways that you can fund your account at Madison Trust Company. So you can fund it either via an initial contribution. You can fund it by rolling over funds from a qualified plan into your Madison Trust account, or you can transfer your IRA account over from another custodian into Madison Trust Company. We do have a dedicated transfers department that can also assist our investors with that transfer process. And they're happy to answer any questions about the forms or your former custodian, what steps we need to take to complete that process. And last but not least, this is where the fun begins. You're going to invest. As our fabulous manager, Donna, likes to say, sit back, relax, and enjoy watching your retirement portfolio grow. So speaking about the investments, it's important to understand that Madison Trust Company is what is known as a passive custodian. We cannot recommend investment opportunities to our investor base. We recommend our clients to do their due diligence on all investments that they plan on placing within their Madison Trust account. As I said before, do we accept 401k or 403b funds at Madison Trust Company?
Yeah, so really any qualified retirement plan is the way you fund your account. That's the way that most people will, or you can make that initial contribution. That's for you to work with the tax professional just to figure out what funding method is right for you.
Absolutely. And Michael mentioned before several investments that you can hold within a self-directed IRA. Now, Michael, can you tell us a little bit more about the benefits of a self-directed IRA?
Yeah, for sure. So before we talk about the benefits directly, I do want to just talk about the term self-directed a little bit more. When you hear the term self-directed, many of you might have what's called a self-directed account on a brokerage, but it's not truly self-directed. It's used in a misleading way sometimes, where particularly in like a 401k, for example, you're quite often choosing from a list of predetermined like fund options or something along those lines. Even a stock market, there's quite a few options, but they're all listed for you, right? Mm-hmm. So when you're choosing from that predetermined list, it's not as self-directed as you think. You're stuck on that stock market. You can't just go to a bank and tell them you want to put those funds into an investment property that you're going to rent out to people. But that's what self-directed is supposed to mean. And that's what it does mean at Madison Trust Company. You bring that investment that you want, and we tell you if you can hold it or not. For the majority of things, we really can, as long as they fit that alternative asset rule. And you're seeing those main benefits that we want to talk about on the screen in front of you. The benefits of having a self-directed IRA is that first one, portfolio diversification. Again, you get to really invest into things that you know. That ties in with that hands-on investing. If you know real estate, of course you want to put your money there. You don't want to be tied to stock with a company that you don't know so well. And it's a lot of these things are more stable. Debt instruments, for example, usually have pre-fixed rates of return on top of that. So it's whatever you're comfortable with. It's whatever you want to put your money into. It's not just stock. On top of all of that, the stock market can be pretty reactionary. The word volatile, you see it on the screen. Your debt instrument doesn't care about Elon Musk tweeting. It's not going to affect the stock price of your promissory note. Your real estate investment doesn't care about the latest Bezos news story. It really does hedge against that volatile stock market. And once again, you get to put it into what you know. That's the true benefit of this self-directed IRA. On top of that, you still get to enjoy the tax benefits of any retirement account with either traditional funds or Roth funds or one of the other types of IRA accounts that we have here. So, as in any industry, there are multiple providers for a service, and the same is true for the self-directed space. So what makes Madison Trust Company stand out, and what's the advantage of using Madison Trust over another company? So Nicole, tell us why you would choose Madison Trust Company.
Excellent, Michael. Great question. So what sets Madison Trust Company apart from other self-directed IRA custodians and anyone else in the industry? And you'll see it right there. It's that Madison Trust advantage. So first, I'd like to start by saying we do have 20,000 investors and 4 billion assets under custody. Keeping that in mind, I want you to understand that we do have an incredible client support team. This support team is going to be customer service oriented for each investor and really walk them through the entire process of setting up, funding, and investing a self-directed IRA. At any point in time, a client can call our support team. We have an account navigation program where investors could ask those specific customized questions and try to understand a little bit more about their investments at Madison Trust Company and how to diversify their portfolios.
That account navigation features are a real treat of Madison Trust. It's very hard to get on the phone with some of these other custodians, but we always have people willing to answer. I mean, those dedicated, specifically navigators.
Not a robot either.
Yeah,
It's
exactly.
not a robot. So it's going to be, and I'm going to give a shout out. It's Emily Egan. She does a phenomenal job. So as far as, we do have straightforward fees at Madison Trust Company. We do not charge investors based on their portfolio value. We have a flat rate fee structure. So it's $100 a quarter. That's $400 annually. Clients are required to maintain a minimum balance in their account at all times, but that can also be maintained via their IRA funds or on a credit card.
Yeah, it's more of a deposit. It can be maintained in a variety of ways.
Exactly. And last but not least, industry knowledge. I'd like to point out here that we have our team that completes the CISP training. In addition to that, we also complete education and educational resources, additional trainings to just keep ourselves involved within this industry and be the best equipped associates that we can be. So as far as our attendees, I'd love to have you reach out to any of our team members and ask those questions and figure out what are the most popular investments at Madison Trust Company. And Michael mentioned them before. So I look forward to your questions that you do have. And as of right now, the next slide will show our contact information. If you don't remember a question that you're about to ask, no problem. You can reach us here. Phone numbers, emails provided. And that's where you're going to see Donna right there. Fabulous investments manager.
Yeah, and of course, we'll connect you with Ian as well. If you're interested in setting up that account, he can answer quite a few more questions there, and we can provide that contact info afterwards. We'd like to open up the floor if there are any questions from the people out there. I believe we probably have a chat that's being used. I'm assuming Mike is monitoring that in some way. So if any questions have come in during this time, we'd love to field them now. And if not, we have a few commonly asked ones that we can go over as well. So Mike, I'm not sure if you're hanging out over there still, if you're able to see if anyone has any questions there.
I've got our first question. Yes. I've got a question for you myself. What is the difference between a self-directed IRA and a Roth solo? What is the difference between those? Do you know? Can you explain that to us, please?
I believe what you're talking about, and correct me if I'm wrong, are you talking about a solo 401k by chance?
Yes.
Okay, so yeah, this gets into the idea behind IRAs versus 401ks. A 401k is an employer-sponsored retirement plan. An IRA is an individual retirement arrangement is the best term to use. It can be an account annuity, but it really has to do with that employer portion. We actually have a sister company, Broad Financial, that sets up solo 401ks for individuals. That's really for self-employed individuals. They are their own employer and they get to make an employee contribution as well as an employer contribution. Ian could have another conversation with you about that as well. We have some other folks over at Broad Financial that can help out. We can share some information about that too.
Wonderful. Fantastic. Okay, the next question here is for Summa Terra Ventures. It says, how can Canadians invest? I'm assuming you have a self-directed IRA. I don't know what mechanism you'd be using there. I know a lot of Canadian investors that have United States LLCs or United States assets. And you can certainly participate. We don't, it doesn't matter which country you're in for our participation. In that project that I showed you a minute ago, the Heart, that bigger 107 unit, we had a lady from Spain in that deal. It was a little inconvenient for her when we did our capital calls once a month with our Zoom partners. That was like 2 a.m. for her in Spain. So that was not her favorite thing to stay up those nights once a month, but we sure enjoyed her participation. And then we have a second question. So yes, you can either go through yourself individually or an LLC. If you have a local LLC, it wouldn't matter to us, by the way, if you had a Canadian LLC or however you guys structure your assets in Canada. And of course, if you have I would highly recommend, if you have funds here in the United States, to consider a self-directed IRA. The many benefits that have been extolled today by Madison Trust. Next question we have to Summa Terra: how do you get the 40% return? Have any of your investors experienced any losses? If yes, please explain. So we have, one of the things that we have is we generally in our underwriting like to see capital returns that are equal to or greater than, so our profits are equal to or greater than 150% of the cash required for a project. So if I have a project that's going to yield a $10 million profit and I need $7 million of cash to make that work, well, $7 million is far less than 100% of 10 million. So a 40% return, for example, on some of those assets is not a reach for us. Now, typically we like to shoot for 50% of the profit in a project goes to the house or Summa Terra Ventures, and 50% of the profit goes to the cash. Now, in that model, if we had a $10 million profit and $7 million in cash, and half of the profit of $5 million went to the cash, $5 million on $7 million, $5 million targeted hope for profit on $7 million investment is far more than 40%. So at 40%, we have our beginning sizes of capital that comes in, typically $100,000. And we have our largest capital partner right now, I think has about $3.3 million in any one particular asset. So it really is easy for us to do that because of the size of the profits that we have, and then our willingness, obviously, to share those profits with our cash partners, which is fantastic. Now, one of the things that I wanted to do here in wrapping this up is, if we can screen share here in a second, I will go back and give you my contact information as well. So we can do that, and then we'll open up for any other questions. If there are any other questions that you have, please type those. But one of the things that I wanted to mention to you guys is get your Madison Trust self-directed IRA set up. And if you got one, man, get some more funds in it. They're wonderful vehicles. Some of my happiest partners are self-directed IRA people, because it's almost like you're gaming the system, right? You can grow your money, you can have all these benefits, and the tax protection and the other things are absolutely fantastic. So we'll have you do that. Now, one of the things that I wanted to share with you is I'm more than happy. This has been kind of a brief overview of what we do and how we do it. I didn't want to be too extensive today, but you're welcome to reach out to me personally. And a text works best. If you call me on the phone, I won't answer it. So I get so many spam calls. I don't answer numbers that I don't have. If you send me a text and say, hey, this is Sally, I was on your self-directed IRA, when can we chat? I'll text you back and we'll get it set up. So that's my direct line cell phone number. And then another great way, of course, is I'm an avid emailer. So you can email me at mike@summaterraventures.com. Now, we have another question that's come up that will direct towards Madison Trust. The question is, can Canadians use their RRSPs at Madison Trust?
So that's a very good question. So generally, my understanding, Ian might be able to answer this a little bit better than I can since he handles the onboarding side. But my understanding is that most foreign investors usually have some form of American citizenship to set up a retirement account. So there may be a way, but generally it has to do with some citizenship. But as far as rolling over, I'm not familiar with that plan specifically. There may be a way, but in that case, I would defer to a tax professional. They'd be able to understand those intricate portions a lot better than we can from our end here.
Very good. Yes, and I would recommend that. So we've got some insightful questions. Our next question is, do you have a waterfall approach to sharing the profits distribution? This is a high-level question. I appreciate this. i.e., Summa Terra gets paid first, And then the cash investors and self-directed IRA investors are the last. And actually, it is quite the opposite of that. Let me tell you our waterfall. We have a three-pronged waterfall approach. And that three-pronged waterfall approach is this: when we sell an asset, if we're planning on selling it, or if we're planning on keeping it and we refinance from the construction loan to our long-term financing. And by the way, think of this for a minute. If I build a $30 million asset, our construction loans are typically less than half of the future value of an asset. So if I have a $30 million asset, my construction loan is usually $15 million or less, which is one of the reasons we have these great profit positions. Now, there's a lot of other costs that go into that. That doesn't talk about also the capital that we have from our partners, but there's lots of room here. So the waterfalls at Summa Terra Ventures are these: when we close and sell or refinance from our construction loan to our long-term takeout, our first waterfall is we pay off the construction loan. That's the first thing. Those guys are typically on a title as the first trustee to note, so they get paid first. The second waterfall is the capital contributions from all of our capital partners. So typically, like that 107 unit we just saw, we closed that in October. At the closing, the construction loan was paid off and the whole balance of the rest of the funds were held at title. About a week later, because there's a lot of moving parts in finishing out the asset and reconciling the 14 spreadsheets with the builder, going through all the draws and making sure everything's final. About 7 days after we sold that asset, we funded all of the capital contributions to the partners second. So, and Summa Terra Ventures did happen to have some money in that deal in one of our affiliates. So that money was paid out at the same time. So if you have $100,000 or $1 million, you're paid at the exact same time. There's not a pecking order. So first waterfall is construction loan. Second waterfall is original capital contributions in pro rata to all of the partners that are in that asset. And then third, so about a week to 10 days after our capital contributions, after the dust had settled, then the profits went out. Then the profits went out in terms of the targeted profits that we had hoped for and we had put together on that deal. Now, that 107 unit deal, as good as it was, we had some real issues with supplies during there. You guys remember how crazy supplies have been, skyrocketing inflation costs. We did finish about 11% below where we had hoped to go. So somebody that was targeted for 50% might have ended up with 44.5%. And since Summa Terra was founded in end of 2017, beginning of 2018, we have not had a loss. We have not had anyone that has had a loss. Losses are for us when we're hoping to get you 50% and you get 45.5. That is a loss to us. So we're working very aggressively to underwrite these conservatively moving forward. So again, construction loan first, capital contributions second. There's no pecking order on the capital contributions. And lastly, profits are distributed at that point. So any other questions or comments?
Mike, yeah, I just wanted to, loop in here about Madison Trust. So just something to keep in mind, we don't require a minimum at Madison Trust Company of how much to invest. A lot of, we see investments amounts of all different ranges within a self-directed IRA. So you don't have to have just $10,000 to keep in your Madison Trust account at Madison. The ranges based on whichever investment you are interested in.
Very good. And I actually have a 401k. I need to give you guys a call and try out that 10-minute test.
Let's go, man.
I've been a little derelict in doing that because I'm in the middle of these deals, right? And I'm not supposed to bread my butter with the one hand to the other. I got to talk to you about those nuances there. But I've got a 401k. I need to turn into a self-directed IRA and get that worked out. So any other questions that we have from anybody here? We'd love to answer those. And again, you're welcome to, here's another question for Madison Trust. Is Madison Trust a regulated entity? Who regulates Madison Trust?
So we are regulated by the laws of South Dakota. That's where our business we're incorporated.
Headquartered, yeah.
Headquartered, that's the better word. So we have an office in New Jersey, which is where Nicole and I are based out of, and we have our headquarters in South Dakota with an office out there as well. And we have investors throughout all 50 states. Yeah, I do want to touch upon the 401k just for a minute. I'm happy that you mentioned that because that's something that often gets overlooked by investors too. A lot of people have outstanding 401ks. They might have worked a previous job and their 401k is still over with that administrator and they kind of forget about it. And that's like the ideal thing to move over. If you can consolidate a few 401ks instead of having them all over the place and not really knowing what they're doing, that's when you can take it self-directed and put it into something you know. So I'm just happy that you touched upon that. Sorry, just reminded me of that point there. You know.
Very cool. Yes, I am the target of that comment right there. That was aimed right at me, Mike. So I need to get that done. I know it's not a huge number, but everything counts, right? Everything counts when you're putting together your retirement fund. So guys, it's been an absolute pleasure to speak with you today and to host this webinar. And we've loved working with Madison Trust. The one thing I can tell you from an operator of a real estate perspective is we do work with different companies out there, and Madison Trust is at the front of responsiveness, of professionalism, of getting things done quickly. And if they say this is going to take 3 days, it doesn't take 3 weeks. They get their stuff done. And it's been a real pleasure because we do have lots of avid people that are interested in putting money in a self-directed IRA or taking a self-directed IRA and deploying it. And there is some documentation that they need to review and some things that they request from us. We try to be very aggressive in getting those things to them, and they're very quick in their response in reviewing them, approving them, and getting funds directed where you want them to go. That's the key, is these guys take direction from you guys on your funds. And that's the whole point of a self-directed IRA.
Yeah,
so let's go ahead.
2 weeks to kind of set up everything. That's sort of the estimate that we like to give people. If you're responsive, and it can be done in 2 weeks, sometimes less if you're, quick and going.
Yep.
But thank you for inviting us on here. We really had a good time. We love spreading this knowledge and just like sharing about this powerful tool that investors can use. So really, once again, thanks, Mike, for having us on here too.
Yeah, we had a couple of more questions come in real quickly. What's the minimum amount you must keep in each of your self-directed IRA accounts?
Yeah, so the minimum balance for the retirement account, that's a $500 minimum balance. It can be maintained a number of ways. It could either be $500 of uninvested cash, or if you want to use your full retirement funds, you can pay that deposit on a credit card. That $500 minimum balance is something that gets returned to you guys. And we don't just hold on to that. It's mostly we keep it on the side in case we need to pay fees with that in the background. This way it doesn't stop action on your account.
Very good. And then we have, what public information is released by Madison Trust for account holders, i.e. financial information?
So we take account security pretty seriously. Pretty much none. I'm not sure exactly how to answer that question because we don't share information. To get information on someone's account, you can do what's called an authorized representative or an interested party. That's up to the account holder to designate, and they do so by filling out a form. So if they'd like someone to have informational access, they can tell us that, and we'll make sure that they complete things correctly and let us know specifically who they want to. When we designate someone at that status, we verify them when they're calling in to ask about an account. We'll only respond to their very specific email, or we'll talk to them on the phone by verifying them through our multi-factor authentication. We know who we're speaking with, and you're not just going to be able to call in and get information. We've had
information is confidential.
Yeah.
We're not sharing that.
I'm sorry, there was one last piece to this question that might make more sense. I think the intent was, what information do you send me about my account on a regular basis? Do I get a quarterly report? Do I get a monthly report? Do I get a semi-annual report? I think that was the intent, because the last comment is quarterly, i.e. financial information, quarterly financial reports. I'm guessing they want to see some type of reporting on what their IRA is doing. And this is a little bit different. If I have an IRA and they have 17 different stocks that they put my money in, there's going to be reporting on that. When it's a self-directed IRA, you're in the asset, you're kind of running shotgun and on that asset, and it would be your responsibility. For example, if you were a partner of ours, we would be giving you updates monthly on the asset, where we'd have a monthly Zoom call. So you get financial returns and information and voting and those subjects on a monthly basis. And then I'm wondering if Madison Trust puts out anything in addition to that.
Quarterly account statements are sent out to our investors, and we can generate account statements, but whenever that client may be interested in that. Yeah,
so at our request at no charge, and we also have a client portal that individuals can enroll into it and sign into, and they'll be able to see the items in their account, their assets, and the funds that are in there as well.
Wonderful. And I think I heard you say earlier that's a $400 annual fee. It's $100 quarterly. Is that right?
That's correct.
That was the last question. What annual fees are there? And I think that's the totality of it, $100 a quarter or $400 annually in the aggregate.
Yeah, we really like to stress that point. We don't hide any fees from any. We have a one-page fee schedule. It's very clear what you pay for on any of our forms. If you're investing, if you're choosing an expedited option, if something needs to get out there, like it'll tell you that, sending a wire costs $25 is a very common thing. It'll tell you that making the investment costs 50, and
Yeah.
those are the fees that most clients will incur. You only do it when you're taking action on the account. Other than that, it's the $100 to hold the account.
Yeah, and as Michael just said, our processing times, 4 business days for standard processing, and clients can elect expedited processing, which is 2 business days for an additional fee associated.
For the vast majority of clients, that standard time is very
good.
and very you'd be hard pressed to find that turnaround time in the self-directed space.
And I would agree with that. I would concur with that. And I was just sitting here thinking, man, you probably should be hosting a podcast or some type of a radio show. You play really well off of each other.
That's awesome.
Been fantastic. So guys, I wanted to tell you, it's been a pleasure to be here today. And oh boy, we've had a few more things pop up here real quickly. Does Summa Terra have an independent management company to oversee operations and financial performance, external auditor? Now we do that all in-house. But one of the fun things that we do is typically 1 or 2 times a quarter, we send you the full bank accounts. So we send you the reconciliation of the bank account as you are a partner. We talk about major expenditures, so you get to see the QuickBooks, you get to see the financials, and you get to ask questions on that. I think that was some people took that as kind of a surprise, where the first time we send out financial reporting to you guys, that you get to see everything. There's no secrets here, it's full transparency. So we do that, and we share that both on demand and both when we're not asked. So reconciliations, expenditures for a month. If we have an asset that has rental income, you get all of the property management reports monthly, whether it's the rent rolls, the T12s, the financial reporting, the budgets, all of those decisions are made as a group, and those are shown to you in real time and upon request too. So we have those as well. So someone else has asked, if I have 4 investments, is that $400 a year or $1,600 a year? I'm guessing, is that 4 separate self-directed IRAs, or if he has one big IRA, and I know this guest, if he has one big IRA and he has 4 investments, is that $400 for each investment or $400 for the self-directed IRA?
Yeah, so the answer is much closer to the 400 than the 1600 side. So we charge $100 per quarter, and that includes your first asset. After that, we charge an additional 25 per asset. So if you had 4 assets, that'd be 175 a quarter. And we also have other options for people who are looking to, some people have 15 assets in their
One IRA.
and that gets to be a bit expensive for some. And then we have other options such as like a self-directed IRA with checkbook control. So we can set up an LLC in that account. And then from our perspective, you have one asset inside of there. It's that LLC, and the LLC has the assets inside of there. So that's something that, Ian can go into a little bit further, that checkbook control side. If you have any questions, reach out to him. Again, that's part of that setup process. And it's something, if you have an existing account at Madison Trust, you can set that up at any time as well. If you find that an LLC becomes the right move for you, it's a higher initial setup. And then from there, it's a lower maintenance fee on the custodial side.
Very good. Well, it's been a pleasure today, guys. I hope that you take action out of here, and 2 action things that you're going to take is reach out to Madison Trust and get your self-directed IRA. I'd love to hear back the 10-minute test. I love 10-minute tests. So guys, get in there, get them done. These guys are very responsive. If there's any hiccups, you can take care of that. And then the other action item is reach out to me, Mike Watson. I'm the CEO of Summa Terra Ventures, and I'd love to have a one-on-one with you and show you some assets and returns and the spreadsheets and the underwriting and the due diligence. If you ask about one of my assets, I'll send you more information than you'll ever want to see in your lifetime. We have an enormous amount of due diligence that we do, and you have access as a partner to every single piece of it. So please do reach out to us. Other than that, it's been a pleasure being a part of this with you, and we hope to hear from you in the future. Anything else you guys would like to add, Madison Trust, as we end up today?
Just another thanks
Thank
again.
you.
Okay, wonderful. We'll talk to you all soon. Thank you for joining our webinar. Have a great day.